Recyclico, making lithium-ion last forever. Recyclico's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. Recyclico Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMYZF, and Frankfurt ID4. For more information, visit recyclico.com or phone us at 778-574-4444. Recyclico, making lithium-ion last forever.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Sean Brodrick, senior editor at WeissRatings.com. He's speaking to us from Florida. Welcome back to the show, Sean.
Hi, thanks for having me on.
Sean, the GDP of the U.S. apparently, surprising everyone, went up last quarter. What's the story there?
Yeah, well, I think, and we certainly will get to that, but it's more interesting that they underestimated third quarter GDP. Now they underestimated fourth quarter GDP. They're saying, don't expect, good GDP in Q1. We'll see what happens. They may have lowered the bar so far down that no matter what you do, it's going to be an upside surprise. But anyway, Q4 GDP grew 2.9%. That was above the 2.6% estimate. That was lower than the 3.2% they did in Q3. But again, we are beating estimates. One important point is that residential investment fell by 26.7%. So that's huge. We are having a recession in housing. The rest of the market doesn't really be seeming to take notice of that. We're having a recession there, and we're having a recession in tech employment. But that doesn't affect the employment numbers either. We could also speak about that. So it's pretty good. GDP, what that did was that sent the price of oil up, and I can tell you why the price of gasoline is even more volatile. Hopefully we'll have time to get that. And that sent the price of gold down. That was the first time gold went down after 5 sessions of going higher. So I think there's still gold whales out there, or at least one big whale who keeps buying the contracts. They just decided to sit this dance out, but they'll be back. Gold looks incredibly bullish. And so with this bullish GDP and the low jobless claims, which again surprised tremendously. What you have there is that you have economic strength when many people are saying there isn't going to be economic strength. And so the economy keeps chugging along. Now you're having people reprice for a soft landing again, where just last week it was all doom and gloom. I don't really know what's going to happen. And then over in Supercycle Investor, I had subscribers buy calls on a Chinese EV maker. And the fact that China's opening up from a 3-year COVID lockdown should be very good news for EV car makers like NIO. And sure enough, those are going higher. So, and I don't know if you've seen chip stocks and stuff like that. Those are ripping out of the gate. We are seeing big layoffs in tech companies, but you know what? There's a lot of open positions in tech. There have been positions they haven't been able to fill. What those people might be able to do is find another job right across the street. It might be at a slightly lower pay level, but it's still a job, so they aren't even bothering to file for unemployment. And so things seem to be adjusting. It seems more bullish than bearish is actually where I'm going with this.
Well, the advantage of perhaps going to a smaller company is you get stock options offered to you, and look at the early employees for Microsoft all retiring as multi-millionaires.
And also you may have more of a voice in what direction the company takes, stuff like that. I mean, there must have been plenty of people at Google who saw this Meta idea and thought it was the stupidest thing ever. I mean, it's just dumb to move everything onto an online virtual platform when that technology is not perfected yet. There must have been people there who were gritting their teeth and just going through with it, and if they're out now, they're probably saying, well, great, now I can go work for a company that doesn't have its head up its ass. So, I think you'll probably see some of that too.
Crude, how much do you think it's going to go up? We've heard predictions. If you thought gasoline prices were high last summer, wait till this warm season.
That's a good question on crude. I mean, I would think that it would have well, of course it depends about which crude you're talking about, right?
Yeah.
But let's say light sweet crude oil, in the U.S., you'd think that it has overhead resistance between 90 and 92. So it could go that high. It is topping out right now, despite the bullish move today. It is topping out at the high it hit in, when was that? That was early January. So it's kind of topping out there. It needs another push to go higher and make that run to 90, 92. But I can think of plenty of reasons why it would. Gasoline, and I am going to hark on this, it's even more bullish. We just saw Valero come out, and it said that Valero said that it sees no problem selling all the gasoline it can make this year. Plus, there's 10 refineries in the U.S. that have about 10% of capacity altogether that are going through shutdowns for various upgrades, that kind of thing, where, like, you know, it all, in any case, they are going to shut down for a while. So they'll be undergoing some level of, like, maintenance. That could last between 2 weeks to maybe 2.5 months, actually. And that starts in mid-February. That's when that starts. So if you have, not all at the same time, but approximately 10% of U.S. refinery capacity go offline starting in February for at least a couple weeks, maybe 2 months. You know, I mean, that's just going to send gas prices higher. And that's going right before driving season. So normally in the summertime we see gasoline prices go higher anyway. I think that's going to come early. Now, I don't know what's going to happen up in Canada, and I'm sorry about my ignorance of that. I know you guys pay high prices anyway, so when people from the United States complain about high gasoline prices, you guys must roll your eyes so hard that they fall out of your head. I mean, I know the high prices you pay, but if we do have higher prices, if we do have more demand down here, that can impact how gasoline flows around all of North America. So that'll be kind of interesting.
Yeah, and don't forget, Sean, there will be the annual refinery explosion / fire while they're doing that.
I hope the heck not. I hope there are no refinery explosions whatsoever. Let's keep things nice and safe. I almost knew a guy who worked in a refinery, but he had a very specific job, which means that his chances of blowing up were very, very slim. And he could have had another job with more pay, but he chose that one in particular. And I do not blame him whatsoever. That would freak me out working at a refinery. I mean, yeah, it's safe. Yeah, they're very, very careful. But every now and then, something can go wrong. And that's the part that would bother me.
Every spring.
Oh,
I've been on the news business for 47 years. Every spring, there's always a fire or an explosion, and they always blame it on the temporary workers brought in to do that maintenance you talked about.
Right. Well, so I did want to add one thing that over the past year, global gasoline refining capacity fell by 730,000 barrels per day, and only 850,000 barrels per day came online. So, you know, I mean, if we do have economic growth because China's coming back into the global market, if the rest of the global economy picks up, that's just looking at a tight market, period. That is just tight all around. So that's one of the reasons why I'm turning more bullish on, like, energy. I'm adding more energy stocks, stuff like that. Natural gas still looks terrible. But on the other hand, I mean, natural gas, which is at or near 1-year lows, I mean, it looks bad now, but this is when you find the bargains, when no one really wants these stocks anymore. So keep that in mind too. Now's the time to find your high dividend paying natural gas bargains, because those that can survive in this market, most of the smart ones are hedged anyway, right? And they must put in some hedges at some high prices, or at least if they were smart, they did. Then they'll be okay this year, and good investment now.
Well, we know the oil companies aren't investing in new rigs or exploration because the Canadian and U.S. governments have made it clear they don't support fossil fuels anymore without a transition plan to anything, to electric vehicles. So in the meantime, we'll get to pay, in Vancouver last September, we were paying $10.68 a Canadian gallon, $2.67 a liter. It'll be higher. And of course, in Canada, their solution to high gasoline prices is to add more carbon tax to it.
Yeah, well, and also, I mean, speaking of oil rigs, these offshore oil rigs that Transocean has, to build one of those now, it costs $1 billion. Do you want to make a $1 billion investment in something that you're not sure about the demand for over a 15-year period? It has to last 20 years, but you at least want the first 15 years of it to make money, right? So, I mean, yeah, we'll still be using oil, we'll still be using gasoline 15 years from now, but who knows what will happen to the market? Maybe the market will shrink and they won't need, that new offshore oil rig. And so you can see why companies would hesitate to actually build those. It's kind of a chaotic time for the oil and gas industry. I mean, they're making great profits, but at the same time, they have to be worried about the big global trends.
We'll have more with Sean Brodrick right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Sean Brodrick. Sean, going ahead, do you think the U.S. dollar has bottomed out, or does it still have more room to drop?
Well, that's a great question. I mean, I keep posting a chart of the U.S. dollar on Twitter, I think, every Sunday, along with my other, like, gold and S&P 500 and copper charts, that kind of stuff, oil charts. And the U.S. dollar is just in a downward slope, and it bounces every now and then. It bounced, it actually bounced on Thursday, sure. But just the big downtrend is there. It's not going away. I think it could easily go down to test like last year's lows. That would not surprise me at all. That's a heck of a fall, frankly. I mean, the lows for last year came in January. The U.S. dollar index was around 94.70 something, 73. So, I mean, that's still a heck of a move lower. And if the market becomes convinced that the Fed's going to stop raising rates, and maybe even start cutting rates, though I think they'll probably hold interest rates at a year or so if they can get away with it, just to get off the interest rate roller coaster. They would like the market to calm down about everything the Fed does. Holding rates steady for a while would actually take a lot of heat off them. But if people think that's coming, then we could see the U.S. dollar go lower. Now, I can say that, and someone will come up for a reason to the U.S. dollar to rally, which is usually that the U.S. dollar looks much better than other currencies around the world. Whenever the dollar goes up, I say that it is winning a beauty contest in a leper colony, and so we'll see what happens. Maybe if a lot of money flows out of China, and there's a lot of Chinese billionaires that have been stuck in that country for 3 years, and they really want to get out now. The way the government is changing the rules and cracking down on people, they have at least $120 billion worth of money that they want to bring with them. Not all will come to the U.S., but some could, and then some could have other money hidden offshore elsewhere, right? That they never revealed to the government. That could be, I don't know. let's say Argentina, and which would be a terrible place to invest your money. Let's say Switzerland. And so they want to bring that to the U.S. It could be a very volatile time for the U.S. dollar going forward, and not for all the reasons that you would normally think about. Normally it's, Fed rate hikes or cuts, but there could be other forces out there that are actually pushing the dollar around, like, say, over the next 6-month period. So it'll be a very interesting time to watch.
If the U.S. dollar's not hot, what would replace it?
Well, I mean, oil currencies, probably the Canadian dollar, which actually bottomed in October. I mean, why not that? That could look good. I wouldn't. Now, of course, we say that, and of course, what should be one of the worst currencies, which is the Great British Pound, which had a terrible time going into October, bottomed, and it's roaring out of there. There's a lot wrong with Britain. I mean, it's not a place where I'd want to invest right now, and yet their currency is doing great. So, let's also bet on the Australian dollar. That's a resource-heavy currency, of course, but we know people want lithium. It's producing a lot of lithium. We know people want gold. We know they want all the metals, copper, iron, all that stuff, coal that Australia produces. So no wonder that currency is doing really well. I'm not a currency expert, though, I can tell you that. I just really use it as how it affects gold and oil. Those are the things I really focus on.
Well, at least in Australia, they have a government that realizes that natural resources from a big country like that is the way to run the economy. The Canadian federal government finds every excuse not to open a new mine or develop anything.
Yeah. Well, I can't speak to that. I'm stunned by some of the pushback that say that new lithium mine that they want to build in Lake Nevada. Why there's such a problem with that? It's a lot of it is the not in my backyard thing. It just comes back to haunt us because people they like the idea of a mine. They don't want one in their neighborhood. So you need good community relations and other stuff. But yeah, that definitely slows things down.
Yeah, I know people oppose open pit mining, but I've seen in Alberta where they had open pit gold mines, all the coal is gone, and it's now a beautiful park with a giant lake where the coal mine used to be. And it's beautiful, and people love camping there, and the fishing is great.
Yeah, well, we're not going to solve that problem, you and me talking about this. I mean, there are more and more people. They hate when stuff ends up in their backyard, and yet we need more and more resources. So, seems like a tough spiral right there.
Sean, anything else we should be keeping a close eye on right now?
Tech's having a good moment right now because people are thinking that we aren't going to have a hard landing. The jury's still out on that. And I have been bullish when others are bearish. I'm just trying to prevent runaway bullishness. Take things slowly. If you want to ride the tech bull for a bit, there's nothing wrong with that, but don't invest whole hog because it can turn around and have, like a 20% downdraft. I like the action in gold. This one-day pullback after 5 strong days, but look at the trend in gold anyway. Since that bottom in November, of course there's going to be pullback. So, I think that's definitely going over 2,100 in the next few months, and that looks strong. Oil, we're seeing oil demand come back stronger than ever. It is probably, along with iron, probably one of the most fundamental commodities that we trade, and, oil looks bullish for this year. I know we've had 2 bullish oil years, so it's kind of hard to say, well, how is that possible? How can this train keep running? Well, we don't have enough supply. We have too much demand. That's why. So, there's a lot of things to watch going forward. Do keep your eye on tech because that could be an exciting rally. Also could bite you in the butt if you're too slow. But there are some things you can do in there to make some good money.
Sean, thank you so much for chatting with us.
Thanks. It's always a pleasure.
My guest has been Sean Brodrick, Senior Editor at WeissRatings.com. If you have any questions for Sean or any of our guests, you can send them to info@HowStreet.com. Our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.